Yeah, I'm just gonna wait till a few people join. Got three put-ins. Cool. Manage participants. Man, this is gonna be sweet, man. I can't wait. It's 8 o'clock. It's on the dot. Yep, I'm gonna just start. Time is money, man. Not waiting for nobody. Alright, so every week, back to the basics as always. So we got Sunday's opening price here. Sunday's, let's get the opening price, or the weekly open. Right away, we know where our premium and discount levels are. Anything above in the premium is basically a high probability for sell setups. Anything in the discount is high probability for a buy setup. You can see here, Monday, because it is Monday, I think Monday makes the low. Monday makes the low of the week here. Tuesday comes back down again, below discount again, and we can see the sponsorship is coming by the commercials below the line. It is hindsight now, because after the weekly candle, weekly range expansion has finished, we can see that the sponsorship was here and here. Because ever since Monday and Tuesday, price never comes back down into a discount. So this is telling you that they want to get price action to a certain high. And we'll talk about that later in the video. But we can see how each day it's breaking the previous daily high. The market structure is trending. So if you were to zoom in and look at each day, like this, I will make this blue, and the low is actually this one here. Actually, it's this. Yeah, the low's here. That's Monday's low. Going into Tuesday, we never take it out. We take out Monday's high here. Tuesday comes back down into a discount, and then it rallies up one more time. After this, Tuesday and Wednesday, Thursday, and Friday, price never comes back down into a discount. We just keep breaking the previous daily high. So Wednesday breaks Tuesday's high, as you guys can see here. This is Wednesday's high up here. You can see Thursday runs right up, takes out Wednesday's high, and the same thing here on Friday. Friday comes up and takes out Thursday's high. But you'll notice every single time the market started dropping down, it was met with buying. So when the market started going up and then it started coming back down, instantly the market went right back up. And what are people doing here? They're getting overly optimistic because they think dollar's still weak. Yes, but according to this, it's in a premium. Shouldn't we have seen a selling opportunity here? You see it there. It may not be inside a kill zone, but it did happen within the day. It may not happen exactly where you want it to play out. You can see how price comes up and then comes back down. Rallies back up. Anybody that was selling here was overly optimistic. They probably thought DXY was going to continue the drop. Unfortunately, they were met with what? Buying or hedging. The market runs right back up. And all these sellers, what do they have to do now? Since they are short in the market, at this point here, let me go back to Friday. Let's say hypothetically, retail traders are going short here. So they go short. Let's put a short position in it. Let's say they got it perfect, which we know it's never going to be that way. Let's say they got it very perfect at the high when it started turning down. And they're looking for something like this, right? Some run back down. But then we see price action later in the future run all the way back up to their entry. So once price gets back here, most people are getting nervous because it's coming back to entry. And then once price gets above that, what are they most likely going to do if they've been stopped out? They have to then what? Mitigate the losses. So what are they most likely going to do? They're going to stop trying to sell, and then they're going to flip to go long. Because anybody that was selling here, they've lost profit up here. Because price came back up and hit them out. They need to mitigate the losses. Now, let's say you were the trader that took a short position here, and you saw price come back up above structure, above a swing high. In order for you to mitigate your losses, odds are you're going to have to buy and chase for a higher price. And where can you buy? You'll buy right here. Price comes down, fails to take out this swing low here. You're buying inside this candle here. That's where you're buying. You're buying right there in the breaker. I'll draw it all the way out till Friday. There you go. So that's Friday, higher close. Normally we would like to see Friday have a lower close. So if the weekly chart is trending bullish, normally Friday and Thursday will have counter trend days. So Thursday should have made the high of the week. Friday should have closed lower. But instead we can see how the news pushed price higher. And they really were trying to get DXY to a certain high. And we'll talk about that. So we come here. We go to IPTA. And I'll draw it out with you guys because a lot of people are confused when I do this. So I'm coming to the first of the month when I'm looking for these levels. I'm coming straight to the first of the month. So let's say today is February 1st. The first thing I'm not normally doing this on February 1st. I'm normally doing this the day prior. But let's say today's February 1st. According to ICT, using the IPTA data range, we're going to look back 20 days. So we're starting here and I'm counting back 20 days. So this is just my quickest way to do it using the tool. 20 days. Coming back here, once again, enable closing captioning. Who can see this transcript? Okay, so I'm going to put caption. Going back 40 days. Then I'm coming back to the first again, and I'm going back 60 days. 60 bars. Same thing. So I have all the dates. At this point, I'm then going to cast forward 20 days. Now, why am I casting forward 20 days? Because this is the time where I'm most likely trying to anticipate range expansion for the monthly candle. The monthly candle is going to have an open, high, low, and close. All monthly candles are like that. All candles in general. It doesn't matter what time frame you're watching. It is going to be a moment in time where the candle is born and then it's deceased. So the candle is going to be a baby, and then it's going to grow older, and then it's going to die, essentially. There's an open, high, low, and close. And I need to catch the range expansion. This is how I'm anticipating it. So from the first going forward 20 days, this is my time. This is the play area, essentially, or the time that I have to find a trading opportunity in 20 days. Because I know every 20 days, the market is either going to make a new leg higher or a new leg lower, or it's going to stall sideways. Every 20 days, the market is reaching for a new liquidity pool. That is either going to be in the form above a swing high or a swing low, chasing buy side liquidity or sell side liquidity. There's nothing else the markets are worried about at all. So when I come here, I'm finding the highest high in the 20-day quadrant. So that's my 20-day high. So I'll mark it off as the 20-day. I'll keep it on the left side because I want to keep the charts clean. I don't like sloppy charts. We come here, we're looking for the 20-day low, which is here. So within this period, that's the 20-day look back. Because I feel like a lot of people were confused about how I'm going about this, and I just want to clarify that early. I now have a range, high to low, of where there is going to be some type of open float or open orders residing. There's going to be buy side liquidity and sell side liquidity below that low and below that high, above that high, 20-day low, bottom left. Now I could do the same thing for the other quadrants as well. So this is going to be the 40. And yes, I am recording this, by the way. Make sure I can hit record. And then we got 60 here. And this is just a 20-day cast forward. And we got that. I find the highest high, within the 40-day quadrant, not the entire 40 days here. I'm looking for this specific quadrant here, the 40-day look back here. What's the highest high? It's here, December 7th. And mark that out here. And just for time's sake, I'll just put 40. I don't have to write out the whole thing. I'm looking for the 60-day one, so it's going to be up here. And then we'll move all these up, if I can. Going to do the same thing for the lows as well. 40-day low right here. And yes, I'm drawing the lines all the way to present day price action. I'm not keeping it back there. And then we got the 60-day low. Now already I have a scope or a map of what the price action is going to be. I don't have to wait to see where the high or low is going to be. I know that this is the 20-day low, there's sell side liquidity here. This is the 20-day high, there's buy side liquidity here. There's the 40-day high, there's buy side liquidity here. This is the 60-day high, correct that. There's buy side liquidity here. So that's my open float for IPTA. Going into this month, what am I speculating? So this is almost like a top-down analysis that I'm showing you guys. I need to understand seasonality, because each month out of the year, 12 months out of the year, they're not all going to move the same way. They are going to be influenced by other factors in the marketplace. So I'm going to go over here. I'm going to go on equityclock.com, and I'm in incognito mode because it allows me to go through it multiple times. I'm going to now look for the dollar index. I'm going to find dollar index, DXY. See if I get it. Nope. Dollar index. There it is. We can see for the month of February, for this one, because when you guys come to this website, a lot of people may question, but when you've been doing it for a while, you'll notice. Look at the bottom of the chart. This is the most recent seasonality chart that they have, that they're providing, because it's using the previous year, 2022. So if it was 2024, this would say 2023, because it's using the prior year and the last 20-year range, and it's giving you an average. You can see for February, normally, seasonally, February tends to be strong for the DXY. So I already have that in my mindset. Okay, February most likely is going to be bullish. So I come back to the chart, and I'm thinking to myself, okay, if the commercials wanted to push DXY higher, how would they do it? It's most likely going to come from a break of a low. That's it. They're going to take out anybody that was buying. They're going to run their stops, get them out the market quick, and then run higher. What significant low do we have in price recently at the start of the month? The 20-day low. Right there. This low here. So if I want this to be bullish, I'm thinking to myself, how would I, Deontay, if I was controlling the price action, how would I shake out enough players, take their money, and then run price the way I want it to go? I would run the low first. Let me get the marker. I would run the low first. And after running this low, I then will start moving price in my intended direction. If we play it out, I'm going to play it day by day. Pause. What does price do there? Bang. Breaks the 20-day low. And it's not random either. They're doing this strategically. The commercials run the 20-day low. The algorithm is using prior data, finding where the largest orders of sell-side liquidity is. It's right here. Boom, they take it. In my mind, I'm instantly thinking, okay, this is where the buying opportunity is going to happen. Because commercials are buying after breaking a low. They're not buying before breaking the low. They're not buying here. They're buying mainly after the bulk of the ranges ran. Then they're going to push price higher. So we can see price comes down. I play it forward. Good speed. One is good. And we can see instantly price is met with dynamic price action. And how do we know that? Because if I take this off, and you see this recent swing high, short-term swing high right here, 1, 2, 3, that's a swing high. Now, why is this a swing high? Because there's a lower high on the left and a lower high on the right, and the middle candle's low is broken. That's a swing high. That's a confirmed swing high. We draw this over here, and we can see there is speed ran through it. There's a gap in price. There's a volume imbalance, and there's a fair value gap. I would favor the fair value gap over the volume imbalance. But you can see there's a fair value gap here. Breaks it with speed. This is a shift in structure on the daily time frame. That's significant. To me, I'm thinking to myself, okay, we broke a swing high with speed. Odds are this is going to be an area that I need to look for a buying opportunity in. And I'll put back this so I could put it back on the 20. There we go. Going into February, we see instantly February 2nd, February 3rd, February 4th. Quick price action after taking out that low. So we know a big dog or a big player has stepped into the market here. This fair value gap here to here is what I would eye. Now this looks very similar to what I was showing you guys on gold, and we'll get into gold. We're going to get into a few other pairs. But this is the fair value gap here. This is the speed and price action, or the busy, the buy side imbalance, sell side inefficiency, whatever you want to classify it as. Because price is running up, and the analogy is, the most common analogy is that people like to use, that ICT speaks about, if you were a painter and you were painting a wall and you stroked your paintbrush too fast up, you run out of paint, you have to dip your paintbrush again to then swipe your paintbrush back down and then swipe it back up. That's what's going to most likely occur here. Price is going to come back down into the break of structure here. But where did price reach to? An old 40-day low. That's not by coincidence. Price runs up into that 40-day low and stops. And then comes back down. And if you play it forward, what happens? We tap into the fair value gap. Now I know when it comes to PD arrays, especially the fair value gaps, or even bullish breakers, bearish breakers, mitigation blocks, void imbalances, most likely that PD array is going to be mitigated in a 3-bar pattern. They're going to run away from that PD array in 3 bars. It doesn't matter the time frame. I'm just showing you the daily because it's easier to comprehend the idea. It's going to be 3 bars that this pattern is going to make to run away, because that's the turning point. It takes the commercial 3 days at least to make a new confirmed swing low, to make a new leg higher. It takes 3 days to turn the market around. That's all it takes. You see price comes up, comes down into the fair value gap that we were suspecting. There you could be a buyer. Somewhere in here you're looking to be a buyer. Now, when would I most likely buy? Well, personally, I would buy after what? A down close candle. Now, why a down close candle? Because if the market is trending up, the down close candles are just counter trend candles. That is where the commercials is. They're reloading their boat to go long again. You'll even notice, before we move on with this example, I'll just show a quick analogy. Look at this price leg down. Not that I'm picking anyone in particular, but look at this price leg in the 60-day quadrant, or even from November all the way to December. Look at this month here, November to December. We can see that the monthly expansion was down for the month of November going into December. We can see every up close candle for this monthly range expansion was met with heavy distribution. Up close candle. What happens the next day? Drops dramatically. Up close candle. Drops. Up, drops. Up close, up close, up close. These are all just counter trend days. They're just repositioning themselves to go short again. But everybody thinks that they're just ramping up price, and they think price is going to keep doing this. That's what they think. And I know there's a lot of people out there that think that this is going to happen. It's not going to happen. Especially if the institutions are showing you market structure is bearish and they're reaching for a swing low. I know it is hindsight, but hindsight exposes us to experience. That's the only way you learn these markets. Your future price action is not going to tell you nothing because you don't know what's going to happen. But you can always go back in history and see what it repeats itself. And it constantly repeats itself time and time again. Year after year, month after month, day after day. It's not changing. They can't systematically change the market. It's already coded. Something really dramatic would have to happen if they wanted to recode the market. But you can see here, up close. What happens after the three up close candles? Dynamic price action. They're running away from the up close candles. Same thing here. 1, 2, 3. Sell off again. These are all counter days. All these days right here. Counter, counter, counter. All these days right here are all counter trend days. Those are opportunities you could take advantage of if you know the bias. If you know the bias is bearish and you can see that price action is respecting premium discount arrays, just wait for an up close candle to sell. That's a little quick gem. Easy gem for people. It's not going to work in a consolidating model. If the market is sideways, odds are you're not going to make a lot of pips. But if the market is ready and is primed to trend and make a new leg on the monthly chart, you're going to make a lot of money because it's easy to see that. You just wait to sell here, sell here, sell here. Just don't risk more than 2% when you're selling. Eventually, you're going to get back into profit. Same thing here. Sell here, get back into profit. But your risk parameters need to be on par. You can't just risk 5% on one up day. You want to risk 5% on this day. Let's say the next day it doesn't sell. What happens now? Price runs up. You blew 50% of your account already because you want it to go heavily short. You got to make sure you're risking well in all these models. So back to this. We got the 20-day low broken. And I know that if this is going to respect this, any down close candles after this is going to be met with buying. They're going to distribute it to the upside every single time. That's the swing low. 1, 2, 3. Like I said, this is an easy way to know if market structure is going higher. We just recently broke a swing high. 1, 2, 3. We need to wait. If you are not sure, you want confirmation. You want to be sure that the markets are going higher. Unless you're a little riskier and you want to get into the market a little earlier than other people before this swing or somewhere in this fair value gap, you wait. If you're not really sure, you want to wait for the confirmation, you want to be a safe trader, you take precaution. You wait for the higher swing low. Because this is what? This is a swing low here. And if this is a higher swing low, that would tell me, wait, market structure is going higher. Why are they making a higher swing low after breaking a swing high? Because they are bullish. It goes down into the fair value gap. Odds are we're going to run away from this candle and this candle. Price is going to run with speed. Where is it most likely going to run? Probably a swing high or an old high. But then we can also use IPTA. Like I said, these levels are here to help you figure out where price may draw. We have the 60-day low that's still intact. An old 60-day low in this quadrant. That's still intact. We can see price probably run into it. We can see we got really close, and then we got a down close candle. That tells me odds are that we're going to get speed through the 60-day low because we stalled out. We got really close. They teased everybody. Got really close and then stopped. And then they repositioned themselves to go long again. So if we play it forward, price runs higher. Pause it here. Too fast. You can see here price makes a swing low. Price comes back down, runs the stops again. It happens. You're not going to win it every single time. Price comes back down again, creates another swing low. It's not a significant lower swing low. It's relatively still equal. So you can say, okay, is that a double bottom? Potentially. Price comes back up, creates a swing low. 1, 2, 3. Price runs up, takes out that candle's high. And where does it run again? Right back into the 60-day low. And let's see, this candle's coordinates is 104.13. If we come here and look at the close of this, where's the close? Hits 104 as well. If you look up here, look at the C, when I'm hovering here, 104.96. Look how close that is. It's not random. Look how close that price action is to that 60-day old low. It's a significant price point. Price closes right there on Thursday. Runs up above it, and then closes right there back at the low. And we can see price action once again running away from the down close candles. You could be a buyer here. You could be a buyer here. You could be a buyer here. Price play it forward again. Down close candle. You could look to be a buyer. Now, some people may ask, but where should I buy? You want to buy in a discount, whether it's underneath SOP, whether it's below midnight opening price. You want to be buying at a discount at all times. You don't want to be buying at a premium. That's your safest option. So you would set a buy stop here. So price comes down, hits you in a stop. So you're buying on weakness. And you'll have a stop loss below either the previous daily low or a previous swing low. And you would hold for higher prices. So you would go long here. But let's say you're in drawdown now here once again. So you go long again. When price comes here, you set another limit here to stop you in. And you go long. Price doesn't get you in long there, but you're still long from this candle. Price comes up. And this is where we are currently in price. And what are we aiming for? Buy side liquidity. Going from sell side to buy side. And what did I say before I started drawing this all up? That the market is most likely chasing liquidity. And after we take out the sell side liquidity, I want to run the buy side liquidity. Look at what we're chasing. The 20-day look back data range high. Right there. And what do we have relative to that? The 40-day high. So odds are it's going to want to run up in here. Might give a down close day because we've been trending up and we recently broke another swing high. So when I see swing highs broken, I normally anticipate some type of reversal, especially if it's ran through with speed like this example down here. If I see a swing high ran like this, I know that it's going to come back down in here and try and find ground to go higher. This wasn't ran with speed. There's no fair value gap here when it breaks this. So odds are it could come down to here and trade off it as a bullish order block, or it trades off of it once price gives another down close candle. And is going to most likely create what? A higher swing low. So this formation here, higher swing low, you can see here, there's a higher swing low right here. They're moving price higher. And they're making what? Higher swing highs. This is the first swing high that was broken to give us the indication that we should be looking for higher prices for a dollar for February. On top of the seasonality, let's not forget that, seasonal interest was bullish for February. Doesn't mean it's guaranteed. The price action needs to align with the seasonal tendency. If it doesn't align, odds are it's not going to happen. It could still happen even if the price action may not show you it exactly, but you want it to be in line. You want the high probability confluence of price action and the seasonalities going together. Price breaks the swing high. What happens here? There's a higher swing high formed. Now the chart's getting messy. So many lines. Higher swing high here. Price runs through it again. After it breaks this swing high, look at the swing high in the red. 1, 2, 3. What are we most likely going to expect? A higher swing low. What happens after breaking the higher swing high? 1, 2, 3. And this is where that high probability scout model comes into play. I like this one as well. The high probability scout basically says if after breaking a swing high you get a swing low, the third candle in that swing, whatever candle breaks this candle's high, because it may not be the next day, it could be the following day, but whatever candle breaks this candle's high in that swing, 1, 2, 3, whatever candle breaks it, and it was this one, this candle's high is the high probability run on buy side liquidity. Odds are the next daily candle is going to blast through this candle, and that's what you get here. It's a higher chance that this is going to run up because the quote-unquote momentum, and I'm saying that in quotation marks, the momentum is bullish. You can see prices running up, and it's taking out previous daily highs, not previous daily lows. Look at the trend in the model. Previous daily high broken, previous daily high broken, previous daily high broken, previous daily high broken, previous daily high broken. So that high probability scalp could turn into a trending model if you have a running stop. If you have a trailing stop and you're just scaling out and you're holding a good significant of the trade still, you can hold that for higher prices if you see fit. But you can see 1, 2, 3 after breaking this swing high here. This red line is the swing high. Price breaks that swing high. Price even breaks this lower swing high here. Runs up. And you can see higher swing low. It's a stepping stool. Runs back up. 1, 2, 3. this candle's high is broken by this candle here. That means this candle's high that I'm drawing right now, this high that I'm drawing back and forth, this is going to be the high probability raid on buy stops. What happens the next day? You get a banger. You know that this high most likely is going to be broken. Yes. Will this high be broken before midnight opening price? Potentially. It can happen because we know the new daily candle starts at what? 5 p.m. New York Eastern Standard Time. A lot of people get that confused. They think the new daily candle is literally starting at 12 a.m. New York Eastern Standard Time. It is not. The 12 a.m. opening price is just the IPTA algorithmic opening price. When the engineer of the market, the actual algorithm, is now starting to say, okay, it's time to work now. Let's get busy. It's time to trade. That's what's going on at midnight, and it's finding its discount and premium levels below and above midnight opening price. And we'll get into that through the weekly range as well. But that's how I'm going into each month. I don't change this formula at all. Sometimes it comes at me a little different. It's not this cut and clear, but this is normally the ideal setup when I use IPTA. It's a simple run on liquidity. Up, down, we're out of there. Now we're running back up to what? The 20-day high. Easy trade. You can make a substantial amount of profits if you know what you're doing, if you're risking well, if you're positioning yourself well, if you're using proper risk management. Doesn't take a rocket scientist to see that DXY was going to be bullish for February. And it's the same thing for gold. I'm not sure if I have it on gold. Let's see. I want to make sure I have it on gold. I should. Yes, I do. Same thing for gold. What does gold do? Gold runs up, takes out what? The 20-day high. Now, the fact that I know that February is bullish for DXY, I need to see if gold, seasonally, I'll type in gold, is bearish. Is there any sign of February showing me bearish price action? There's not. It just looks like it's running straight up. You can see how it's not coinciding with what the price action showed for February. This is why I say all the time, you need to check the dollar index. You need to check other currencies. The other currencies will let you know what other currencies are most likely going to do. If dollar is running higher, gold is running lower. And if gold isn't running lower, then there's a problem. There's a crack in code. And that's another conversation. But you can see how the seasonality chart is not matching up to gold. That's not correct, right? A lot of people are saying, well, you told me that seasonal charts show me exactly what the month is going to do. Not necessarily. The price action needs to line up with it. You can see the price action does not line up with it. It runs the 20-day high, and then it runs lower instantly. And the same thing happens again. Look at the fair value gap here. I'll make it blue. It runs it down. Where is the market structure shift? Right here. Look at the speed. It's running that swing low with speed. Instantly, price runs into the fair value gap. Dynamic sell-off. Up close, up close, up close. All counter trend days. They run away. Up close, they run away. Up close, they run away. This is that up close? It is up close. Up close, up close, up close. They run away. You can also see the natural range of price action too. The market has two natural cycles, large and small, big or small. That's it. Look at this large candle, large down. Odds are tomorrow may not give you another large candle, so you might risk less. You're protecting yourself here at this point. Up close, right? But it's small. What happens the next day? Look how large this candle is. It's always been in front of everyone's faces the whole time. It's just hidden in plain sight. They're fooling people. What happens when you get these small body candles? People are very disinterested with it. It's like when you wave a $5 bill in front of a person's face, they don't get excited. Ah, $5 bill. Or a dollar bill or whatever. Ah, dollar bill. Or you shake change in front of someone's face. But then you take out a stack of $100 bills. Then people start getting excited. That's what these large candles are. It's money opportunities. But you missed it. Because when you open your chart and you look at this, you've already missed it. But what are they doing to you psychologically? They're telling you, oh yeah, you should chase price. And what happens? You go into the market the next day looking for a sell opportunity. What happens? You sell too heavy, you go full margin, you blow your account because they pull it back up. They trick you again. They trick you. 1, 2, 3. 3 up closes. But I thought price action was bearish, Deontay. It is. You just have to wait. You're going to be faced with opportunities like that. But look at where the levels are hitting off. Scroll down. 20-day high. Price comes all the way down after breaking the 20-day high. Hits the 20-day low. What happens after we hit the 20-day low? Reaction. That's when we hit 1820 mid figure. I was saying that in the daily gold updates. Those algorithmic numbers are sensitive to price. They're either going to be shooting through the price or they're going to be hitting the price and then giving a strong pullback. That's normally what happens around those prices. They're either exiting out of their trades. So what happened here? They were short, and then what happened? They most likely took profit. And then you get a pullback in price. And what do they do again? They start reaccumulating, right? Reaccumulating their short positions. While everybody's still trying to go short, they're running it back up. They're running it right back up. And what happens after that? They finally get to a point where they're happy enough, and then they break it back down. And where does this stop? Where does this price action stop? 60-day high. I wonder why. It's not a coincidence. I'm not saying every single month when you use IPTA is going to be very straightforward like that. Because there are many examples on my TradingView profile where let's say like I'm doing March, or I'm doing July, or let's say August. And I do IPTA. It's not clean like this sometimes. The story is not too clean for me to understand. Sometimes there are a lot of other moving parts. And I may have to use the previous month's IPTA data range highs and lows. Because let's say, because a lot of people have this question. Let's say instead of price, bring it here. Instead of price taking the 20-day high and then selling, some people can say, Deontay, what if it just did this? Then all these levels basically would be insignificant. If I see that price action showed speed to the upside, because let's say hypothetically it was following this, the bullish price action in nature, it was going to go up. I want to see it break a swing high with a fair value gap. And then I want to see price come back in and then create a higher swing low, showing me higher prices. Then all these levels here, the 20-day low, the 40-day low, the 60-day low, or the 40-day high, or the 60-day high, they may be insignificant. But what can I do after that? I can go back to the previous month's IPTA data range and see if those levels give me anything for current price action. Does it line up somehow? Is there a monthly IPTA data range high or low, 20-day or 40-day or 60-day high or low, that hasn't been broken yet? I can still use those previous data points if these become non-consistent or not feasible anymore. If it's not feasible anymore, then I'm going back the next month, I'm drawing out the same thing, and I'm literally finding the 20-day, 40-day, 60-day high for the previous month to compare to the current month to see if any of those levels will help me figure out where price action is most likely to draw. That's what you would do in a situation like that. I hope that answers any question that people have for that as well. But back to the daily, weekly range. Dollar straight up. Buying opportunity is below SOP. It's a discount. Like I said, any day that you're looking to be a buyer, you may not know the bias. Let's say you don't know prices going up. But if you had to buy, right? If you had to tell yourself tomorrow, I'm a buyer, you better be buying below midnight opening price. There's no excuse to that. Why are you buying above midnight opening price? That's a premium. You want to pay expensive. You want to get in at an expensive price. That doesn't make sense. That's not sound logic. That's not what a businessman does or a businesswoman does. You want to get into the market at a discount. You want to be a cheap state. You want to be cheap. You want to get the lowest entry possible for price to run higher. And if we look at each one of these days, midnight opening price, let's take this day here. That's midnight, because I know it's an up close candle. We'll delete this so your eyes are not like looking at a lot of things. This is Wednesday's daily range expansion. You can see it happens a little later in the day during New York session. This is the opening price. That's 12 a.m. New York Eastern Standard Time. 12 a.m. I know many people may have heard this concept time and time again, but it is critical. I am telling you, this will change your trading for the better. This is why I teach it all the time, every time we come on this. It's the easiest way to see profitability instantly. You want to make more profits? Buy in a better area that makes sense. Buy below 12 a.m. And you can see the sponsorship. Where's the sponsorship? Here, here, here. Now it's up to you to figure out directional bias. You may get it wrong. You're not going to get it right every single day. And you may get it right for 3 days in a row. You may get it right for a whole week in a row. Whatever the case may be. But eventually you're going to get the daily bias wrong. I get it wrong sometimes too. Price comes down below midnight opening price. That's a buying opportunity. What session is that? London. Doesn't take out the Asian session low. It is kind of sideways. It doesn't take out the Asian session low. But where's the buy opportunity happening? Below midnight opening price. And if we go a little further, because everything is just a fractal. If we go a little further and investigate Wednesday, where is it at? Wednesday in itself, look at the London session. This is the power 3 that I was trying to tell you guys about. Each session has some type of particular power 3. It's not always going to be super clean. That's midnight opening price. Anything above is a premium. Anything below is a discount. We can see they're buying below. But if we were just to look at the opening price for London at 2 a.m., and I picked 2 a.m. because it's European open time, so I think it makes more sense. This is Euro open. And I could see, look how they're stalling price earlier in the session. Very early into the session, they're stalling it. Stalling. And then eventually what do? They lure traders to the wrong side. Everybody that probably is a breakout trader, they find some type of excuse to tell themselves, yes, it's going to sell. And it happens to not sell. It comes down, and then it tricks everybody back up. Everyone is trying to sell. Especially if it would have got down below the Asian low here. If it got down here, everybody was most likely going to think this was going to happen. That does happen in certain cases, but you need to look at other pairs to know if that's going to happen. Like I showed today for Friday in GU. GU was the odd one that was completely not doing what it's supposed to do. And we'll get into that example as well. Price comes down, right? And it's the same thing like a daily chart or a weekly candle. That's the opening price. And we'll draw it out like a candle. That's the opening price. This is the drop down. Price drops down. And then it does what? It runs up. And the high is right here. And then it closes here. Is it 5 a.m.? Yeah, it closes right there. There you go. You got your accumulation, manipulation, distribution. Your power 3. That's what power 3 is. Accumulation, manipulation, distribution. Those 3 things. Accumulation, right here. Manipulation, down here. Everyone is trying to sell. Distribution, look at the range expansion. Runs really fast to the upside. And then it closes off here. It closes off from its high. And that's what you normally like to see. But there's times where on the daily chart, and this is a little advanced though, but I'll throw it in here anyways. You know the market is most likely going to make a turning point if it starts closing really close to its high. If the close is like all the way up here, or the close is the high, most likely they're squeezing a lot out of the market, and they're going to turn the price around really fast. You'll notice that as you trade. Look for a daily candle that closes really close to the high or really close to the low when in an uptrend. Odds are after you see something like that, you're going to see the market start to turn around. Same thing, if you see the close, let's say this is inverse. The open was here, and the close is down here. And that's the daily chart. Most likely, if you see something like this, the close exactly at the low, or the low is the close, eventually that's a warning sign that price is squeezing a lot out of the sell side liquidity, and they're going to turn price around eventually. That's a warning sign. That's what I like to use. Larry Williams has taught me that in the book. If you read the book Long-Term Secrets to Short-Term Trading, really good book. I think everybody should read that. But that's the power 3. Accumulation, manipulation, distribution. And then they run price higher for the day. Let's look into another pair. Look into UJ. And best believe you guys are going to be able to answer questions towards the end. I wouldn't leave you guys hanging. I know I'm not looking at the chat, but I just really want to get this across to you guys. I really owe it to you guys because I don't like when I waste people's time because I hate when my time is wasted. Where's the low of the week coming in at? Monday. You can see the low of the week is right here, Monday. So the huge sponsorship here. You can see how Monday is very choppy. It's sideways all the way throughout London and New York. Choppy, 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 choppy. Close this up. You can see price runs higher into Tuesday. Moves sideways. Sideways. We're still in a premium. So odds of you finding a sell is more likely. Doesn't mean it has to happen, but the probability of flipping a coin most likely is going to end up on your side. And you're going to get a sell opportunity eventually. Now, if you're going to look for a sell opportunity, how would you go about it? Me personally, I would wait for a previous daily high to be broken. Like I said, the commercials like to buy after breaking a low. They like to sell after breaking a high. What happens on Thursday? Thursday runs out Wednesday's high and Tuesday's high. So it runs out 2 days prior highs. So mark this up right here. High here on Thursday and high here on Wednesday. Takes out 2 days prior's high. We're in a premium. High odd sell scenario. When is it happening? I would only expect it's probably happening either in a kill zone. So it would have to be either in London or New York. So we'll check it out. You can see it's happening in New York. So you get price to come up, take out this high, and we get a New York reversal. And it continues to drop down. You even get the London close. If you throw in the London close as well, 10 a.m. to 12 p.m., you can see it even continues, causing the market to drop all the way back down. And where does it bring price back down to? Discount. Right there for Thursday. So this was all quiet. They literally held price for the news event. Hold price, held price, held price. News event comes out. It's anticipated on this day, and then it comes out, boom, blasts off. But you see how they're stalling, accumulating orders. The same way they do the Asian session is what they're doing here. It's the same concept. Asian session builds in sentiment. Consolidation is building in sentiment. Market sentiment. Buy orders and sell orders are physically being built in here. They're algorithmically building in. It's engineered because you can see it's moving sideways. So that means there has to be buy side liquidity up here and there has to be sell side liquidity down here. They run the buy side first, then the sell side. Where's the true move on the market? The first break. The first break is the real move. You can see how they break the high first, run the low, then they run back higher. And I'll show you the same example happened on London in a fractal where it broke the Asian session low first, then the high. And then what happened throughout the rest of the day? It continued to sell. It's the same concept, but just on a bigger scale here. Same ideology. Accumulation, here you go, manipulation. This is the fake move. The Judas swing. Boom. Right up. Boom, got you. Then they bring it back down. Another Judas swing here. And they run higher. What happens as well? Takes out the previous daily low. Going into a discount, they're most likely going to buy. So things are lining up in your favor. Takes out the low, they're buying below the low in a discount, below Sunday's opening price and below midnight opening price for Thursday. So the opening price for Thursday, going into Asian, it's well below. But by Asian, the new daily candle has already formed, technically. So Friday's candle already technically is forming at 5 p.m. But you can see here, if you're looking at it from an hourly perspective and using the IPTA true day range from midnight to midnight and using this as your quote-unquote daily candle, you can see it takes out the previous daily low, Wednesday, going into Asian, and a swing low formation, 1, 2, 3. Look at that swing low. And then they run price higher. Counter trend candles, down, down, down. And look how they run fast away from these down close candles. 1 hour, 2 hour, 3 hour, 4 hour. 4 hours of the Asian session dropping. And as soon as London comes in around, boom, dynamic price action, boom, the news comes out, price runs higher. And you can see even Friday closes at its very extreme as well. Friday closes at an extreme. So this would indicate to me, from the weekly chart at least, so if we were to take this off, take this off, take this off, go on the weekly chart, it's closing very high at its close. This could be telling me, okay, Deontay, there may be some signs that UJ may pull back, and this thing is getting exhausted, and they're squeezing as much as they can out of the market. Look at the previous weekly candles. You have one here, the price continues to run higher. We have another sign here. But normally when you see Friday or Thursday close way below the close, or I mean way off from the high, not way off, but the top quarter of this candle, right? If you were to break this candle into fourths, it's in the definite top quadrant of it. You can see it closed here. Odds are it's going to keep running for this high. Let me go back here, here, here. I want the London session on. Go back on the hourly. Another idea. Now, when the Asian session is less than 20 pips, I'm going to avoid London session. Look at Wednesday's Asian session. If you see the highlighted A's, that's the pip range for Asian. It makes the cut. Let's say we round it hypothetically, or let's say we're not rounding it and we're really particular and we want it to be specifically 20 pips or more, and this doesn't make the cut, right? We're sticking straight to the guidelines. Asian session needs to be larger than 20 pips and it needs to be less than 40 pips. This doesn't cut it. That means avoid London. Look at how this filter, right, allowed me to not trade London, and look what happens in London. It stalls out. It stalls out. That was a natural price action indication to tell me avoid trading London. It's most likely not going to move the way I want it to efficiently. Look at London session, sideways the entire time. This is no indicators needed. I just knew by looking at this session size that it's not feasible. It's too small. This is going to be avoided. This I trade. I wait for some setup here. And look at how dynamic New York session is. This is very quiet. Very quiet. Look how loud this is. Look at how it's running. It's consolidating, runs, and then it runs low again. But just because of this filter, it helped me pick a better trading session. Helps you out a lot. The small things matter. I can't just go into every day and think, okay, it's London session, it's party time. No, it's not party time. I need to pay attention. You got to be militant. It's less than 20 pips. Okay, cool. Let's nix this. We're done with that. Let's wait for 7 a.m. instead. So instead of me staying up and wasting sleep and getting sleep deprived, I could instantly tell myself by midnight, or even prior to midnight, I would know the Asian session is less than 20 pips. You know? Or let's say I wake up at midnight just to check. I'm like, okay, less than 20? All right, Deontay, don't trade London. You know? Deontay, just leave it alone. Just wait for New York. That doesn't mean London isn't going to move properly, because it still could. It could be less than 20 pips. This could be 15 pips, and London gives a nice AMD setup. It gives a Judas swing and it runs higher, something like that, you know? Or price comes down here, runs the low, and then it takes off like that in London. But that's just a way to help me safeguard myself. I want to pick the best opportunities ever. If I'm going to go into the casino, I'm going to go into the casino with the highest focus ever. I'm not in there trying to go drink and get engaged with all the other activities that impair my, cognitive function or my motor skills or whatever the case may be. I'm trying to go into the casino with the best odds possible. And that starts with me. And that starts with me being focused on what I need to be looking at this chart. Not a single indicator told me, not an indicator will ever tell you not to trade London. What indicator is going to tell you London's not feasible to trade? None. You're the indicator. You need to figure that out. Asian session's too small. Let's chop this. We're done. We're out of here. Let's get some more sleep, because we know short-term trading does impact some people's sleep cycles. Depending on where you live or depending on how your life schedule works, it may impact your trading. Impact your health, because you have to stay up. For me, at least, I live in New York. This is midnight. Everybody's sleeping. I have to stay up. So when I'm in the Telegram channel sending all those text messages, those live updates of GU, I'm awake, losing sleep deprived, because I want to make profit. I'm serious about it. And then I go to sleep and I make my profit within this. And hopefully, once I made my profit here, I can probably have a runner, and then London close will come in. And then London close may stall or move sideways. Or it might give a deep retracement and knock me out. That happens a lot. It may give you a deep retracement and knock you out your trade. But then there are days where it does continue the trend or move sideways. New York session starts and it blasts off. And I grab more pips with a trailing stop, which is what happened with GU when I showed you in the chat today. I got GU and gold. I was able to sell both of those from London and hold all the way through New York, and it blasted off. Same thing with GU. You can see if you were going long here, you could potentially hold into New York, and it blasts off. So we're going to take a look at GU. And then we're going to get back into some IPTO real quick. Take the sessions off, and we'll break it up. You can see the high of the week comes in by Tuesday. That typically happens. So if you're bearish for the weekly candle, so if you're suspecting price action to go down for the weekly candle, it's most likely going to be favorable on Monday, Tuesday, Wednesday. You're looking for a sell setup here. Sometimes it's Thursday. Sometimes it's even Friday. But most likely it's going to happen on these 3 days. Odds are me personally, I favor Tuesday, Wednesday. That's just me personally. But it could happen on Monday. Instead of price doing on Tuesday, it could have did this and then straight down like that. But it happened to do it on Tuesday. And why Tuesday? It looks much better because you can see what happens before it runs this high. It runs a low and a discount. So if we take a look, this is Monday's high. And this is Monday's low. It's it right here. Let me make this blue. Price runs down, right? They fool everybody. And what is that here at the end of the session? We know that's Asian session. Asian session. You got an accumulation, manipulation, distribution. That's the AMD. The same thing, power 3. Just like I showed you on the London session, how the London session has 2 a.m. opening price, then it either drops down to fake everybody in, and then it shoots all the way up through 2:35, 3 a.m. like the heart of New York. Normally by 3 a.m., that's the heart of London. I mean, 3 a.m. you're normally gonna know where price is gonna go. Like if you go on your chart every day for London session, mark out 3 a.m. on your chart. Put a whole horizontal line right there. I'm telling you. 3 a.m. tends to be the shift where London starts to kick and turn. You can see here price comes down. You can see it happens here at 4 a.m. I do the cutoff for 3 a.m. But it's going to be generally in that area. I like to say 3 a.m. personally. But look how 3 a.m. comes. Look at the change in trend. Price shoots back up. Look at this on a lower time frame. Once again, where is price? And this setup was clean. Oh my gosh. The setup was clean. Look at the consolidation. Look at how they're engineering liquidity. The engineering. Sell side liquidity, buy side liquidity. Look at all these equal highs. But everybody's going to come in. Retail is going to say, nah, D, that's actually resistance. It's going to hit it and then it's going to drop. But I know that's probably less favorable because of what? We're in a discount. We're below Sunday's opening price. If it's going to get through Sunday's opening price, it's going to do two things. And it's only two things. The same way with the algorithmic levels. When it runs through the 00s, the 50s, the 20s, the 80s, and then back to the 00s. Or when it hits it and then retraces and gives a reaction off of it and pulls back off of the actual level. The same thing happens to Sunday's opening price. It's either going to fly right through Sunday's opening price or it's going to tap it and then run away. And you can see here on Thursday. Look at Thursday. Look at how it comes into it real soft. Taps it and then it runs away. Look at on Tuesday. Move this over. Look at Tuesday. Comes down, runs right through it. Two different reactions. And that's normally what I'm going to gear off of. And I like these setups are really nice. When you get down to Sunday's opening price, get a quick buy-in right here. Put a stop loss of either 10, 15 pips and try and hold to gain 30, 45. Those are quick little tips to make pips. A lot of people don't know that. But that's a nice little tip. But AMD, accumulation, put the session on. Accumulation, look at it. They take out what? The Asian session low first. We'll mark it out. Just sell side liquidity. Asian low. You can see by 3 a.m., because I like it personally, if it doesn't break both sides by 3 a.m., I know it's going to continue in that direction. If it breaks one side by 3 a.m. and the other pairs are also showing that it's moving symmetrical and it's not breaking code, I know that odds are London is going to run through the Asian high and keep pushing higher. Or it's going to use it as some type of quote-unquote support. And we'll talk about that because I want to talk about the Asian session as well. The Asian session, a lot of tricks and tips you can do around the Asian session. Price runs right through the Asian session. Now, you may ask yourself, well, Deontay, how would I know? How would I have caught this? Right? How would I have had caught the low of the day? You may not. It's okay that you don't catch the low of the day. You don't have to catch the low of the day. You're just trying to take a portion out of the pie. This entire range, the daily candle, let's just say on average, and I don't know this, I'm just making up numbers here for the analogy. Let's say on average, the daily pip range, right, for GU is 100 pips. Out of 100 pips for the daily range, let's actually measure this. Here. So this is more than 100 pips here. But I said 100. Let's say on average it's 100 pips. On average, it's 164 pips. On average, it's 100 pips. You're only trying to take a portion out of that. You're not trying to catch the whole 100 pips. You just need 10 pips. You just need 15. You just need 20. You need 35. Maybe even just 50. But minimum 10 pips will get you far. You'll be very successful. If you get 10 pips on Monday, Tuesday, Wednesday, Thursday, Friday, that's 50 pips in the week. What more could you ask for? You can't get any more greedier than that. You want more than 10 pips. The market gave it to you. Take it, take your bag, and go home. And do the same thing the next day. Eventually, you're going to get more pips. You're going to get days where it takes off and it goes crazy. You get 30 pips. Sometimes you catch 200 pips. 3,000 pips. I mean, some people, luckily, can't catch that. But you're just trying to get a little piece out of the pie. And if you could get 10 pips out of each daily range, you're going to be good. This was 160 plus pips. Guaranteed, there was definitely enough pips for you to make that day. Accumulation, manipulation, distribution. Let's say you missed the low, right? And you know it's going to run higher. What can you do? You buy at the Asian high. That's it. You buy on strength. You've missed the low risk buy. You're still below Sunday's opening price, right? You're still below Sunday's opening price. There's that confluence. You're at a discount. That's the opening price for the weekly candle. So you know you can still probably buy. Yes, you are above midnight opening price. You're above 12 a.m. So you're in a premium. But here, you're using the logic that you know that the rest of the range expansion is going to be higher. So you're using strength to get into your position. So you're going to get in with a buy limit. And price comes in, hits the limit, and then you run in higher. That's how you utilize the Asian session high or the Asian session low. Yes, that is kind of taking a play out of the retail book. You know, you're buying off of the break. Yes, but because we know and we're informed traders, it's the fact that we're informed about what the market is most likely going to do is why we're able to use these concepts. The head and shoulders concept doesn't work because of the pattern. No, it's not because of the pattern that head and shoulders work. You got the left shoulder, the head, and then you got the right shoulder, and then you got the neckline. It's not because of that formation that's setting up that makes the pattern work. It's because of the actual price action. The pattern doesn't mean anything. You could be doing these a triangle pattern or bow flag or a bearish flag. It's not because of the pattern. It's because of the price action that these patterns are working. It's not every time that they're consistent because there are times where it does work. The bull flag works, you know. You get something, and this is an example of one failing though. So ironic. You can see this is a bull flag. Price runs up, creates this. What is retail expecting? Break and higher. What happens here instead? It comes down. So not every time does that retail logic work. There are flaws into it because you need to take into account of each day. There's something occurring each day. And like I said earlier, what did I say? If this weekly candle is going to go down, if this weekly candle is going to go down, it's going to happen on these 3 days. That's your higher chance of catching the sell. Especially if you're above Sunday's opening price, if you break a previous daily high, and you're in a premium. And it sells off. And as we can see, we'll go back. That bull flag just got smoked. Because you'll see somebody on TradingView come here, take the screenshot. I see a bullish flag formation 4 minute on GU, and then post it, and then it'll get 300 clicks. I'm like, 300 clicks for what? Because someone showed you a little pattern? This pattern has no sound logic to it. And then look, it gets smoked all the way down. Whatever stop loss that they had to be hefty because they're buying on the break. They're buying on the retest or whatever. Oh, retest. It breaks out. Retest. Buy. That stop loss got smoked. Wherever that stop loss was, got smoked. But we knew that Tuesday or Wednesday was going to make the high. That's why we knew this retail pattern would probably not work out best. We'll draw this over here. Accumulation, manipulation, distribution. You missed the low entry buy, the hanging fruit. Buying under the Asian session is high probability. If you want me to reword it another way, buying below the Asian session or buying below midnight opening price, high probability buy. You see that here. Sponsorship. Price comes up, comes back down, sweeps, sell stops one more time, and runs higher. And then New York gives a retracement back down into what? The speed. Where's the speed occurring, you may ask? We're on the 15-minute time frame. I enjoy trading intraday on the 15-minute time frame and then breaking it down either to the 5-minute, 3-minute, or 1 minute. I tend to do that. I don't really play around the hourly unless it's like larger setups, but 15-minute intraday normally helps me out seeing things. Look at the speed. It's right there. Look at this huge candle up. What does it run? A swing high before the drop down. It goes up, comes down, and then it runs the high that it came down from. That's the swing high. So that means this is the point of interest. This whole area here to here. And we'll take off the session so we can see it. We want clean charts. Boom. What happens? Hits it right there, New York session. And then gives you another leg higher. And then it makes the high of the week right there. And ever since then, we consolidate. Look at the consolidation. There's so many teaching moments here. So many teaching moments. After 10 a.m. normally, let's say London close. We'll put London close here. 12 p.m. After 12 p.m., look at how price action is stalling. Look at anywhere on this chart where it's not highlighted with the session indicator. Look at anywhere that the chart is not highlighted with the session indicator. What is price doing? Literally nothing. Price is literally doing nothing. You don't need to be chasing price here. You don't need to be trading. You can do something else. Whether you got a job, you got a family to support, etc. Do something else. Because once you get into this after 12 p.m., you're going to be met with consolidation most likely. It's done. You're only trying to trade inside all these sessions that are highlighted. Asian, mainly the yen pairs, not GU. Don't trade Asian. Don't trade GU and Asian. That doesn't make sense. There's got to be some logic behind it. You can't just pick a pair and say I'm trading GU in Asian session. Why? There's no volume for GU in the Asian session. The big dogs are not playing here. They're playing here and they're playing here and they're playing here. After that, they're done. They go on lunch. That's why they call it the New York lunch session. They're going on lunch. After this, lunch session. London lunch, right here. Look in between 5 a.m. to 7 a.m. Nothing's happening here. Yeah, it's trending up slightly, but this is not dynamic price action. Not like the highlighted areas. Because if you look at the highlighted areas, they're more likely to be moving with speed. And let's just count out Asian session, because it's GU. It's not moving as fast. But if we were looking at a yen cross pair, maybe like GJ, EJ, AJ, NJ, or some exotics, they're most likely going to move a lot faster in Asian session because that side of the world is trading. That central bank is getting ready to trade, mainly. Look at how Asian session here, less than 20 pips right here, tells me to avoid London session. Let's zoom in here. Tells me to avoid London session. But what happened? It still gives that. It doesn't happen exactly at London because some people would say they start their London session at 1 a.m. Cool, but I don't. I started at 2 a.m. Let's say I started at 2 a.m. Price comes up, already breaks the Asian session high. Once it does that and London starts, I know that it's going to be a fast tear to the downside. It broke the Asian session high prior to 2 a.m. odds are, if the other pairs as well, if DXY broke the Asian session low before 1 a.m., before 2 a.m. as well, they're going to be inversely correlated, and London's going to drop, and it runs right through Asian session low. Where are we as well when London is dropping? We're above, zoom out, SOP premium for Thursday, right? We're above there. And where are we as well? As soon as London starts, where are we? We're above midnight opening price. Wow. What a confluence. Look at the sell-off. Quick. Doesn't waste any time. These are 15-minute candles. This is a lot of pips you're making. And let's say, hypothetically, you just sold at 2 a.m. because you saw that you're above SOP and you're above midnight opening price and you already broke the Asian session high. And you sold at the opening price, 2 a.m. right here. You had a potential grab of 53 pips before it started turning back around. So let's say you got out literally at 5 a.m. So let's pull it back up to the 5 a.m. close. Right here. You would have banked 32 pips. So if your model was trade the sessions open to close, and as soon as whatever you made at the end of the close of the session, you just closed the trade, by 5 a.m., you would have made 32 pips. Simple. Just because you knew high probability sell. You didn't have to do any fancy setup or any fancy order block or mitigation block. If you have a lazy trader approach, you could have took that sell and you could have held. You sell, have a stop loss of what, 10, 15 pips at most, and then you hold for lower prices. Double what you're trying to risk. You could risk a 1-to-1. Those scenarios could work out really favorable. You could risk 10 pips to gain 10 pips. And then sometimes that 1-to-1 turns into what? A 1-to-4. You make 40 pips instead of 10. It happens. Same thing here. Look how price stalls. What does price do here first for GU? Now we're getting to that GU example that I was talking about around 2 a.m. I'm going to put it side by side with the other pairs as well. We don't care about London. Oh, got a phone call. Give me 1 second, guys. Sorry about that, guys. It's my little brother. Family first. Okay. GU, in this example, we'll run it back so you can watch it in real time. Here. So this is when, my crazy self is staying up when I should be sleeping. Asian session high. Asian session low. And I'll just, I should color code it because I'm always doing this anyways. Asian session high, Asian session low. When I'm watching this, right? Because I'm not just getting into the market and just selling at any point. I'm trying to be real methodical. I'm normally getting in after a break. That's what I like to prefer my trade setups. It's more responsive and dynamic after a break. I get the sponsorship from the commercials after a break of a high or low. I pray price out. London starts. I see this, right? I'm looking at my chart. I'm like, oh, London session. Actually, no, it was here. Because I remember I was looking at it both at the same time simultaneously. I'm not sure if it will play it both. We'll see if it will. DXY. Ah, it's right there. Perfect. Here. We got this on a 5 minute, which is, that's okay. Hopefully you guys can see that. Be staring at these screens long enough, soon I'll be wearing glasses, man. High, low. Now this is how I knew GU was gonna sell today. How AU was gonna sell, NU, gold. This is how I knew it was gonna sell. Price is playing out. Do I have this at 1 a.m.? No, I do not. I know I don't. Oh, I have this at 1 a.m. Is that 1? It's not showing me here. Let me see if I play it. Will it play both? No, it will only play one. Okay. Well, we're going to have to play this side then. Here. So boom. I get an alert. Right? Because I like to use the alerts. I utilize TradingView and whatever. I get an alert that the DXY breaks the Asian session high. And I'm telling myself, okay, it breaks the Asian session high. And it's 235 when it breaks it. Or 230 right here. It even taps it right here even earlier. So we could say 210. See, the high is 104,636. This high is... No, so it gets close to it. This high breaks it there. Boom, breaks it there. And that's at 230. Come here to 230, 230, 230, 230, 230, 230. 230. GU has not broken any side of the marketplace. Hasn't broken a low yet and hasn't broken a high yet. So already I know something's not right with this price action. So when I'm telling myself, I'm like, okay, GU is starting to show me signs that something's not right with it. So then I go right into another pair. So I'm comparing a correlated pair. So I'm looking at GU. So something that's correlated with GU is most likely going to be EU, AU, NU, or gold. Those four pairs are directly correlated with that. So when GU goes up, gold is going up, AU is going up, NU is going up, AU is going up. And inversely, if it's going down, they're all going down. So when I see that, I'm like, okay, let me check to see if any of the pairs are doing the same thing. So I instantly go to gold first. So gold was my first pick since I was trading gold for February. So I go straight to gold. I'm like, let me check gold. Let me see what's up. So I go to gold and go to 230 it was, right? 230. Was it 230? 215? Even if it was 215. Let's say it was 215 because I have a 215 on GU. See, by 215, it broke it even before London session. Broke the Asian low before London session. So I'm telling myself, oh, that's not right. There's a crack in code. GU is not following suit. Because if gold is breaking a low, GU needs to break a low too. Because DXY broke a high. You can see gold is respecting the correlation. Gold down, DXY up. So that checks out. So I'm like, all right, cool. So now check another pair. So let's go down to AU. Same thing here. You can see instantly, I don't have to rewind it, but you can see instantly that AU out the gate, prior to even 2 a.m., it's already breaking the Asian session low. So I'm like, okay, something's still not right. And I go on to EU. Same thing. 2 a.m., it breaks the low. Something's not right. Do I have NU on here? I'm going to do NU so I can show you all the correlations. Because not just one pair. They're all cousins. They're all family. Same thing. Right here. Boom. 2 a.m. it breaks the low. GU's the only one in the family that's not following code. Let's say we exclude gold and we're just talking about the majors. It's the only one in the family that's not following code. So we know something's wrong about this. Someone's upset. This thing is upset. Something is about to happen to this. So I'm telling myself, okay, let's keep watching the DXY. And bring it back. I said, let's keep watching the DXY while I play out, while GU's going. Breaks the low. So I'm like, oh, it's in code now, right? Because I sent in the chat. I'm like, okay, GU's now in symmetrical code. It's finally got in line. It's finally behaving the way it's supposed to, you know? It's been crying, and now it's finally acting right. Now that I saw this, I'm like, okay, cool. So now is this an A and D setup? Because that's the first thing I'm thinking to myself. Because look at where we are in price action. We're in a discount, and we just ran below the Asian session low. I'm like, okay, there's a high probability buy occurring here, so they're buying down here probably. So I'm like, all right, D, you probably got to find a buy position here. But then I'm still watching price, and I'm like, okay, is the buy is it going to be feasible for a buy? Potentially. But then I saw it quickly after taking the low out. Didn't take too long. Took like 30 minutes after. Took out the Asian session high. While the DXY. Don't play this. Don't play this. Wait a second. Zoom in. Go back to the DXY. GU takes out the Asian session high, but DXY is still not affected. You see that? DXY is not affected while it's taking out the high. So that's 330. Go to 330 here. 330, right around here. 330. DXY is not affected by it because it's above the Asian session high. This is above the Asian session high as well. Someone is lying. You see? Someone is lying here. And it's clearly GU because I checked all its other family members. GU is lying. Because at this point in time, gold is still dropping. EU is still dropping. NU is still dropping. And AU is still dropping. AU, GU, and not GU. AU, NU, and AU do not return back to the Asian session high. So I know that they're under heavy distribution. This is under heavy manipulation. They're manipulating the heck out of GU. They're pulling it down, then they're pulling it up, then they're pulling it down, then they're pulling it up. But I will recognize which side is broken first. That's what I like to do personally. The side that's broken first is normally going to be the side that they intend to dump price on or move price towards. So I'm still watching DXY, and DXY is unaffected. Not showing any sign to really drop fast with speed and break and have any market structure to the downside. It keeps running away from its down close candles. Look at all these down close candles and look how easy, no resistance, right? Because retail traders are going to say, oh, this is resistance, Deontay, this is resistance. So we could sell off of here and make some pips back down to what? Probably some support or something like that, Yes, in some cases it does work, but not all the time. It's not logical enough. It's not methodical enough. And playing it out. You see, it gets up to that resistance zone, quote unquote, right? Maybe speed it up. Finally breaks through that. But I thought it was resistance. I thought retail said that this is resistance and it shouldn't come back up there. Impossible. Same thing here. We come back over here on GU. And I'm like, okay, I know that the break was the downside first. So we'll mark this out. This is the first break. And then this is the second break at the top. So I'm like, okay, that's the first break. We don't even have to worry about the high anymore. But I need to probably find a short position above midnight opening price and even potentially even greater above Sunday's opening price. I need to find a sell position above here after getting above this Asian session high. If I don't get that, I just get in and use the lazy trader approach and I put a sell limit right here. So price comes down, it hits me in a short on weakness because I know it's going to go lower. This is how you use the Asian session to your advantage. Yes, you're using retail logic, but you are an informed trader. You know exactly where price is most likely going to go. So because you missed the high buy, because we know in hindsight we saw GU drop, we know eventually GU is going to get back down here. Like I said, if you miss the high buy up here, you know there's still a couple more pips in the market. If it's going to keep going this way, it may come down and give you a retracement and go lower, but that's okay. That's why you have a stop loss. But you get in short here. And normally when I like to get on short on weakness, I'll just put my stop at wherever the London high was made, or I'll put my stop exactly at where the Asian high is and call it a day. I don't try to put any huge stops. And I'm always trying to make sure that the trade setup is allowing me to risk 1%. You move it forward, and I would wait. And price continues dropping. Right? You get that sell right there at the Asian session. Look at London lunch here. Trendy. Just drops all the way down because they're finally letting it go. They're finally letting this market go. They're letting it fly now. This whole time, they've been holding GU under heavy manipulation. And the other signs was that AU, GU, let's see if I could get to it. You can even look at it here. What the hell is this? Come on. Do you want to exit this? No. I want to exit whatever this is. Okay. And this is where I found my short. It's a BPR balance price range. Shout out to Aaron for informing me about that. But I found a short here wherever this box was at here. I found a short, and that's how I was able to hold those gold shorts here. I also sold above the previous daily high. The previous daily candle. So if you go on the daily candle, you go back on that screenshot that I showed you, you can see I had a short. Get this off. I had a short above here. And then price continued to drop. So put this back on. Go back on to 15. And that's how I knew gold was going to continue to drop very fast. Eventually, GU was going to drop too. But I knew that GU, AU, NU, all of them were going to just keep dropping. Look how fast. No, not a chance. Retail was catching that. Not a chance. Drops. All of them were probably looking for some buy setup. But because I was personally looking at GU, and I said, wow, this is really interesting. DXY broke the high, but GU didn't do nothing. Something's wrong here. Checked other peers, realized that they're all still distributing, under heavy distribution. NU, USD. Same thing. Breaks the Asian session low, never gets back to the Asian session high. Just continues dropping. GU is the only one that did it. Now, if we look at inversely correlated pairs, so let's look at UJ. See the opposite. Following the DXY, continues to drop. And we'll play this one out so we can see the rest of GU. Just dumps. Right there. Nice. New York session would open. You could have found a short position above 7 a.m. opening price, and you go short. You can see here, just keeps running up. Let's look at another pair, USD CAD, that's inversely correlated. It's supposed to do opposite to what that's doing. Get UCAD, straight up. Not a chance. Takes out the Asian session high, does not take out the Asian session low. They really wanted price to go higher. Same thing for, let's see, USWISSY. I think USWISSY was very... USWISSY this week, if you guys look at the weekly range of USWISSY, oh my gosh, very bullish. So if I were to break it down from the hourly chart, and you see it with the sessions, this is Sunday right here. That's the start on Sunday. Right here. This is the opening price. Look how bullish USWISSY was for the entire week. Made the low on Monday and just kept running. Breaking the previous daily high, and just kept going. Very strong bullish super cycle here. It's hard to catch weeks like that. You may get lucky in your trading career, you'll catch a few of these, but it's very hard to catch this. Oop, apologize. 9:30. Clear. Price keeps running higher. So that's how I was able to knew that GU eventually was going to come lower, because the first break was down. The second break was here. It's going to go opposite to what the second break is, and it continues to distribute throughout the rest of the candle. You can even look at, I did UCAD, UJ, and let me look at DXY. See the rest of the DXY. DXY, very strong and bullish. Right? And this all blends back into many other concepts that I'm looking at as well. So if we look at UJ, everybody's gonna be like, oh, what is this? Well, this is just a position trade. Now, this concept, I'm teaching so many different models today. I just wanted to make sure that this one was really informational packed. That's a hidden smash day buy, according to Larry Williams. So I sent the screenshot in the chat of the page and everything. That's a hidden smash day buy. Now, why is that a hidden smash day buy? Well, because we know at one point of time, this candle was green all the way up here. But for some reason, it fell all the way back down, way below its high. It fell in the lower quadrant of this candle's range. Fell all the way down here. It gave up all its gains. It ran up, and then it dropped all the way back down there, and then closed. Larry Williams says when you see a candle like this, if price gets back to the high, that is a buy signal, buy entry. That was what I posted when I saw this candle. And then I'm using other parameters, using logical stop loss and TPs. This is a very extreme TP, of course, because I'm looking for UJ to be very bullish this year. Because I think yen is definitely not outpacing any currency right now, unless they do something about their interest rates. Their rates are negative. But you can see how price gets back up to this high. We'll play it forward. There I'm long. And look at the speed that comes in. On top of the confluence of what? 2 counter trend candles. And their small range cycle. Small, small. Large candle, small candle, small candle. Boom. Dynamic. Now, what am I speculating for UJ long term? I'm speculating at least UJ back. Let me see. Where's February? Because I know there's a 40-day high. February. Go back. Yep. 40-day high is right here in December. I'm speculating 40-day high is going to get hit eventually. Now, this that I'm doing here, I'm just going based off of the actual trading day. And I just counted back 60 days to find a range, high to low, from this candle here. And I said I want to see at least price reach up to this 60-day high from the smash day candle. That's what I was doing there. Then I was using a logical point from this candle's day. I was using the recent 20-day low from this candle as my stop loss. So this is a position trade. So yes, price could come back down in here. I would have to hold that. But I would have to risk wisely to hold this trade. Now let's say the trade is going well. And I'm getting counter trend candles, down close candles. All I have to do is keep buying when I get these candles. This candle here, this candle here, this candle here. I could slowly add in small positions each day. It doesn't have to be a huge percent. It could be a micro lot. It could legit be a micro lot or a 10 lot. Not a 10 lot, a 0.10 lot. And I can hold and weather that and slowly compound as UJ is continuing to be bullish. Now let's take a look at yen. Because this all adds together. People think trading Forex is very easy. It's a multi-layer process. Look at Japanese yen. We'll look at the confluence for Japanese yen for February. Bearish. And dollar is what? Bullish. So that's great. I'm taking 2 seasonal charts. One that's bullish and one that's bearish. And then I'm going into the Forex currencies and I'm finding a pair. And what pair does that make? That makes UJ. And that means I need to be looking for a buy opportunity for UJ. And if we look at UJ from the IPTA point of view, if I have it down, I think I should. I do. Oops. I'm always doing that. UJ does not take out the 20-day low. You see that? It's not always cut and clear in the way I want it. Because if I wanted it my way, like I said, if I wanted it my way and I knew dollar's strong and yen is weak, and going into February, I want to see a low taken out. Most likely, it's a 20-day low. Sometimes it's just the most recent swing low or it's the previous daily low. But I'm looking for a significant area of orders. I know this is a significant area of orders because everyone's buying here. And everybody most likely has a stop loss below here. So I'm waiting for the commercials to run everybody out. The trend. They're trying to shake you off the trend. They get you off the trend and then they run higher. That doesn't happen here. But you saw it for GU. Inverse to GU. GU takes out the high and then runs lower. You see DXY. DXY comes up, comes down, takes out the 20-day low, runs higher. UJ doesn't. You can see that they're holding price up. Look at that. They're holding price up. They really want this to go higher. There is some type of SMT divergence going on here with another pair. Right? Now, if you go into another pair, let's see what divergent that may be. Let's go to GBP USD and look at the same thing. Look at that. What are the odds that GU does not take out the 20-day high either, and UJ does not take out its 20-day low? Look at that. SMT divergent right there. Didn't take me too much to see what's going on in price, especially after I saw the dynamic selling. Where's the breaker structure? You can see it's here. Where's the one? Right here. This one here. That's the one I'm concerned with. I'm not really hypercritical about these ones here. This one here. I'm not hypercritical about that one. Why am I not? Because there's no speed breaking it. I'm concerned about this speed here. So here to here. That's the range. Yes, it does come above it sometimes. It happens. Nothing is truly support and resistance. Some things cut through candles. The candles cut through certain zones that you're looking at. It happens. Price wicks all the way up in here. But look at where the bodies are, though. Look at where the bulk of the range is. The bodies are inside the PD array, where the shift is occurring. Below the swing low, speed, fair value gap. Runs a buy stop here, because this could have been the turning point. 1, 2, 3. Third candle's low is broken, but then it comes back and takes out the high. So it takes the high, then runs the high again. Runs the high one more time, runs up, and then it drops. And you can see how price comes up, stalls here, runs up again, stalls. Counter trend, counter trend, counter trend, counter trend, counter trend, counter trend. Is this up close? That's down close. That is a down close. Down close. Counter trend. But all these up close candles are just opportunities for you to probably position yourself in shorts. You can take small positions. It doesn't have to be huge positions, especially if you're someone that doesn't have time to trade intraday, and you know price action is going to reach down to the 20-day low, per se, or some type of swing low. You know it's going to reach down to this low. You're just waiting for this these days. Opposite days. Same thing when it comes to stocks and investing. When it comes to investing or buying a stock, investors are most likely trying to do what? Buy after red days. So when the stock of Apple goes down, or the stock of Google, or the stock of Alibaba goes down, or whatever stock it is you're looking at, Tesla, Microsoft, when those go down, investors are most likely investing more money because it's cheaper. It's cheaper. They're buying it. Now, if we're doing options, of course, if you had an up close candle, right, or you're doing futures, let's say you're doing the futures of Microsoft, or you're trading, the futures of gold of Google or Alphabet. Whenever you get the up close candles, you're trying to position yourself to sell, and that's what's happening here. They're trying to sell it back. And then where's that 60-day low? All the way down here. Now, would it be surprising if British pound got down here? No, would not be. Would not be. Because I know that there's liquidity down here. People are making bank off of this run up here. Eventually, the algorithm is going to say, I need to get that back. They're going to get those traders out. There's also another confluence here, and we're going to show it on EU here, because I think I have it on EU. And I'm going to get right into the questions if anybody have any questions. This last one here. Same thing. EU does exactly inverse to what the DXY does. Breaks the 20-day high. Bang. Right there. Bang. Hits it. Immediately runs away. Where's the speed coming in? Once again, I got to clear this up because it's hard to see it. Make this more transparent. Look at that fair value gap here to here. Look at the swing low. Now this one I personally would think this is less favorable because it's not really inside the bulk of this range, but it's still inside the fair value gap. Look at that right there. Boom. What does price do? Bingo. Hits the fair value gap again. Continues to distribute lower. What happens? Takes out the 20-day high. Breaks that swing low. Makes the market structure shift with the speed. Runs back into the fair value gap. Gives this one up close candle. And after that one up close candle, look how fast price sells. 1, 2, 3, 4, 5. What's happening here as well? The highs are protected. Look at all the highs. The highs are all protected. Make this red. That high is protected. This high is protected because they don't want to chase buy side liquidity anymore. It's trending. This is a trending market. This is where if you can catch these, oh man, it's a sweet week for you. Sweet couple weeks sometimes. 1, 2, 3, 4, 5. Basically that entire week was selling. Not a single time did it break the previous daily high. So from Monday, made the high of the week on Monday, right? It was in a premium above SOP for a short period of time. And ever since then, they did not allow anybody to get a premium sell since Monday. And it continues to drop lower. Drops lower. Maybe even Tuesday. It looks like Tuesday might have been above the opening price. And it drops down the entire week. Running back into what? 60-day old high. Look at that 60-day high. This is the 20-day cast forward. This is the 20-day look back. This is the 40-day look back, and this is the 60-day look back. Look at how price comes down, hits the 40-day high. Look at how it consolidates on that high. Look at the candles. Literally look at the candles and look at where the bodies are of those candles. Look how close it is to that price action. This one's almost perfect. See the pip on this line. 73.62. The close on this one, 73.57. Very close. Look how close that is. Even the next candle, the candle opens very close to the line and then drops down off of the 40-day. Not random. Then it runs all the way down, all the way down, all the way down. Boom, hits into the 60-day low. 60-day old high, 60-day high. And look at where the close of this candle is landing. Right there on the 60-day. And we look at where it's opening. The next day it opens literally by the line. And then it drops away. It almost looks like magic, you know? But no indicator is going to tell you this. None. This is why I tell people, leave the indicators alone in my videos all the time. It is detrimental to the development of a trader. Absolutely. Because it's a crutch. You're using it like a crutch. And you're not letting go of the crutches. If you just broke your leg and you're using the crutch consistently, you're going to eventually need to let go of the crutch so you can maintain and learn how to walk again, get your motor skills back, strengthen your leg again. After a while, you're not going to need those crutches. You didn't need, not say that analogy doesn't make sense. You need the crutches. But in Forex, I don't think you need any of the crutches of these indicators. None of them. Like, I wish they would show some popular ones. I don't even know what these are, you know? Like, I don't know any of these. Like, let's just click something. Let's just click something random. Recession warning light. Warning traffic light. Like, let's see what comes up. Look at this. What? What is this? What is this? What is this? This doesn't tell me anything. Even if someone was able to explain to me what it does, I think I would pass on it every time. Pass on this. Not to hate on anybody that coded this for TradingView and got paid for it. Hey, get your coin. Do what you got to do. But that's not something I would be into because I know it wouldn't be able to tell me this price action here. Would it? Would not. Absolutely not. Retail traders are probably saying EU is bullish. And I'm over here saying to myself privately to my channel, no, gold is actually bearish. So that means EU is bullish, GU is bullish, NU is bullish. And I think that's it. US oil. Now I'm not going to touch oil. Oil has been moving sideways since this global war that's going on. So I'm not touching oil right now. But yeah, this is where we are with gold as well. We just hit what? Perfectly. Look at that. On the dime. 60-day high. Bing. Stops right there on the dime. That is algorithmic to the pip. To the pip. An indicator could not call that. I'm telling you. Yeah, man. So I've been talking a lot. Hopefully that was very insightful. Just going to check the chat. See if anybody got any questions. If anybody got any questions, let me know. Let me check the chat. How do you check chat? Check chat. It's 9:47. It's not 9:47. Time is wrong. It's 9:45. Off by 2 minutes. Boom. I am definitely recording this. Yes, sir. Cool.
What's up, Deontay? Can you hear me?
Yeah, I can hear you. What's going on, man?
What's up, bro?
Not much.
Yeah, bro. Hey. I want to know, man, if you can retouch really quickly
Mhm.
about the basically about London taking out either side of the Asian
Okay.
range, and what kind of like is your approach after like either side's taken out or if both sides are taken out.
Okay, not a problem.
Yeah.
Yeah, yeah. So I'm gonna jump right back into that GU example because I feel like that was just a perfect example, and it's more recent in time. I'm not gonna try and cherry pick something.
Right.
Let's go to sorry, examples. All right. So that was that Friday where GU took out both sides of the Asian session. So I know that the Asian session low was taken first and then the high. Now, like I said, I was comparing the other markets to see what was going on while it was doing that. So if I break this into four, and we look at gold, so on a 5 minute, we'll put it back on we'll put it on the 15. More data. So we got gold here, and then we're gonna put. You could put an inversely correlated pair as well. You could put, let's say, UJ. Are you on the 15? No, you're on the 1 minute. Okay, perfect. All right. So I know that these two pairs on the top are directly correlated. If gold goes up, GU must go up. If gold goes down, GU must go down. And the same thing is said vice versa. If pound goes up, gold goes up. If pound goes down, gold goes down. Now, if gold is going down, that means dollar's going up. And that also would mean UJ is going up because this is correlated. DXY and UJ is correlated. And gold and UJ is inversely correlated. The fact that I see that GU prior to 2 a.m. did not take out the Asian session high or low, that instantly told me something was going on because I started looking at the other pairs, NU, GU, AU, and EU, and I saw that they already took out the Asian session low. I know now that something's wrong with GU because it's stalling. That means either the market makers have it under heavy manipulation and they're holding it for a certain reason. They're waiting for time and price. They're waiting for other pairs to get in line and then they're going to dump the price. Price breaks the low first. Once it breaks the low, I'm thinking to myself, okay, because prior to this, I was thinking AMD setup. Accumulation, manipulation, and then London's just going to run higher. But then I thought to myself, okay, wait. It hasn't, when I got that alert for the DXY here, broke the Asian session high, I said, GU's not moving in code. So something's up. I waited for it to break the Asian session low and then the high. The fact that I knew that the Asian session low was broken first, I knew that was the true intention of the market because the DXY showed no effort to get back down to the Asian low when it broke the Asian session high. You can see,
Right.
look at how GU's at the Asian session high. Dollar's nowhere near the Asian session low. Something's wrong. So the odds are that they're going to heavily put it under distribution now because it's going against what the dollar is doing. How could GU be above the Asian session high and DXY is above the Asian session high? Somebody's lying. That
Right.
somebody in the marketplace is lying. And odds are it was GU because I looked at all the other pairs. I looked at gold. We come down to we looked at AU. Look at AU. Never took out the Asian session high, but GU's doing it. You're lying to me. I'm looking at NU now. EU. You're lying as well because EU keeps dropping. And I think that goes into US oil. Yeah, that goes into US oil. USD. Now, if I were to look for a short position, it's going to be most likely above midnight opening price and Sunday's opening price. But let's say I didn't get that, right? Because not every day it's going to be picture perfect and I'm going to get the sell opportunity. Let's say
Right.
I know it's going to sell. And I know that the range, I know DXY is going to keep running higher, gold's going to keep running lower, and UJ is going to keep running higher. But I want to trade GU. I'm so invested in GU because I know it's going to dump. All I have to do is set a sell limit at the Asian session low. So I'm taking retail logic here. The reason I'm taking retail logic is because I'm informed about what's going on. It's not that I'm misinformed. I already know what the market's going to do. I know it's going to drop. So where's a logical area that I can get in without having to overthink too much? Just use the Asian session low as a limit order and go short here. So if I bring this back to this, I go short. I'll put it so it makes sense here.
Yeah.
Price hits right here. I missed the high probability sell, let's say. It gets close to SOP, really close, hits it, right? So their commercials are permitted to sell because it gets close to it. So they're still allowed to sell. It doesn't have to go above it. Once it's near it or above it, they can sponsor the sells. They're sponsoring the sells here, and they're sponsoring the sells above midnight opening price. I already know that it's going to distribute because of the other pairs. That I already have that in my mind. I missed the opportunity to sell everything up here. I missed that. Let's say I missed that opportunity. What I do is I would come in and just place a sell limit, right here. I'm gonna bring this over right here. Sell limit here, and then I put my stop loss either at the Asian session high, or I put it at the most recent high that it fell from, and then I look for lower prices, whether that's 10, 15, 20 pips. Then I play it out, and odds are I'm gonna get the distribution. I'm gonna catch those pips.
Gotcha.
I hope that answers your question.
No, it does. It does.
All right.
Like I said, I noticed that you got some countermeasures in place. In case either side was taken out, and the way it reacts, in London or sensitive times.
I totally agree. Yeah, London is very tricky, I would say. The reason I say London is tricky is because it's the characteristic, that session itself, its characteristic is a manipulation. It's literally trying to lure the public eye to the wrong side of the market. It's up to you to determine which side that is and try to go opposite to it. So they're trying to get everybody into the slaughterhouse, hit their stop losses, run their margins, and then run price the other way. That's what they were probably doing here. So retail probably was, anybody that was trying to trade the London session was probably very upset because it was just doing this the whole time.
Well, and one more particular thing you talked about was 3 a.m.
Mm-hmm.
Yeah.
Oh, 3 a.m. Oh, yeah. So 3 a.m. to me is like the heart of London Open. So if you were to look at your chart and mark out 3 a.m., normally you will know where the market's going to lead because by that time you might have already gotten the fake move prior to 3 a.m. So I had a time window. So normally my window before, it was 1 a.m. to 3 a.m. Normally I like that time window to see that Judas swing set up. And you can see here, if you were to mark it off, if I made the London session 1 a.m., look at how from 1 a.m. to 3 a.m., look at the fake move right there.
Right.
By 3 a.m., I already know that I already know the fake move has occurred. Sometimes it happens a little later, but that's just my personal preference of using that cutoff. 3 a.m., what's going on? When London's at 3 a.m., am I already above the Asian session high? Have I broke it? Okay, what is now DXY doing when this did that? Is it doing inverse? Is it taking out the Asian session low and then moving higher? Then I know I'm on the right side. So it's not just I'm specifically dialed in on GU. I'm looking at GU split screen with DXY at the same time. And I'm like, okay, cool. All right, DXY broke the high. Okay, GU broke the low. Okay, market symmetry. We're good. I don't have to worry about anything. But if I start seeing there is a non-symmetrical market, GU's breaking high and DXY's breaking high, that shouldn't happen. That's against code. The algorithm does not like that. So that means I know that the market makers are physically coming into the market and they're either holding one pair up, they're holding one currency up, while they're heavily dropping the other. And that's what's happening. That's what happened here with GU. They were physically holding GU up for London. And then they finally dropped it.
Yeah.
Yep. Yeah, they finally dropped. Yeah. 3 a.m. Yeah, 1 a.m., 3 a.m. You see how it turns around and it comes back here. But in my mind, what I like to call this, honestly, it's not like I coined it or anything, but I just like it's like a double fake out, in my opinion. Takes the low, takes the high. And then it runs towards the first break. That's how I like to, in a simple terms, quick and easy way, follow the first break. The odds are it's going to keep going that way. Not to say every single time it does that, because other things need to be in play. But normally when you see London session take both sides out of the Asian session, the first break normally should be its intentional trend.
Okay.
Yeah.
Okay. Yeah, I see
Absolutely.
that. It does take that the buy side liquidity before flushing down. So the buy side liquidity.
Mm-hmm.
Yeah, and then flush down. Okay, yeah, understand.
Absolutely. Yeah, takes
And
out a high.
yeah,
They're most likely to sell after taking out any high. That's just
and
nature of the commercials.
you're above 12 a.m. and what's that? London Open.
Yeah, facts. You're above 2 a.m. opening price. There's so many confluences here. You're above 2
Right.
a.m.
Yeah.
opening price. You're above midnight opening price. And you get really close back to Sunday's opening price. And you're above the Asian session high. A lot of
Right.
confluences going on here to tell you that this might be a distribution coming in. It may not be obvious at first. Because when you look at it by itself alone, until you match it up with something else, like the DXY, then you're like, oh, I know exactly what's going on now. It makes more sense.
Yeah, one thing I wasn't doing was adding the DXY. I was just going strictly off the price action of or anything like that.
Yeah.
Um, yeah. I'm gonna start adding in that DXY or those cross pairs. See what's going on.
Absolutely. Yeah, the cross pairs will definitely help you out. When you look at one pair solely, you're gonna see things that happen that you can't really answer, but you answer it by looking at the other family members. If you look at GU all day, you're gonna be met with something like this, and that might throw you off. But as soon as you look at the DXY or you look at any inversely correlated pairs or correlated pairs, you get that further insight and more confidence that, okay, price should be doing this because that pair is not doing that either. So I'm more likely to get this. Doesn't mean it should happen, but you're just making a more informed guess and being an informed speculator. You're not just speculating off of nothing. You're speculating off of correlations and symmetry.
Right.
Yeah, absolutely.
Okay.
Yeah.
Yeah, man. Thank you, man. You answered my question.
No problem. Anytime.
Yeah.
Anytime. If anybody else has any question at all, please let me know. You can unmute your mic and talk to me. If not, I'll just check the chat if you don't want to talk. But I am definitely here to answer any question. So just let me know if you need anything answered. I want to look at Bitcoin real quick. Little Bitcoin. Yeah, a little Bitcoin and ETH real quick. Show you guys what's going on with that. Selling. Look at that sell-off. Remember that ICT ATM model I was telling you guys about? Look at it there. Boom, boom. Comes back up into this. A lot of more. I don't like crypto. A lot of more manipulation. But I'm going to show you the outcome. Because I posted it here. I posted the Bitcoin and the ETH one. Let me show you the ETH one first. I got it somewhere. ETH right here. This is the ETH. Price comes down, comes up, runs the buy stops here, and then quickly runs to the downside. You see that there's speed right here. Breaks that swing low. So there's a structure shift here going on. There's speed. There's the fair value gap and the swing low. You can go short in that fair value gap and then hold the stop loss. Or you can do the stop loss at the high. And this ICT solely teaches it on the 1 hour. Do I know what the ATM model stands for? I don't know what acronym it is, but he's mainly going off of price action here. When you see multiple rallies up like this, a dip down and up, a dip down and up, and you finally get a dip, run up, and it comes below that dip, you sell there, going back down to these dips. You play it forward, as you can see, we already got back down to this dip here that ran back up into it. That's the low here. I don't know if there's any more to play out. Oh yeah, it's even going lower too. Look, lower here. So you still, if you were to take this trade, which I wouldn't say, don't just solely take my trades, but you see here, it's kind of get to that sell side liquidity below that low. Now let's look at Bitcoin. Same thing. Oh, that's ETH again. ETH. And then Bitcoin. I've been calling Bitcoin a zero. Maybe I got a thing against it. But same thing. Boom. Taking out that low here. Sweeping that right there. And then potentially it should trigger down. Because I know a lot of retail traders are long Bitcoin right now. And I normally like to just go on TradingView. And I would type in just like as a bonus, I would type in TradingView. There you go, Forensic Forex. And I'll come into the search tab because I like to use them as sentiment to see where price is most likely going to go. So I'll go to Bitcoin real quick, see what people are posting on the forums, or even on even if it's an official financial page like FX Street or FX Empire or something like that, I look to see if anybody is going long and why. And I'm mainly looking for a lot of people that have like a lot of indicators trying to say, oh, it's going to hit resistance. Hit support and then go longer and go higher. Normally, then I'm like, okay, cool. I'm using these people that are going long as my liquidity, as if I'm the market maker. I'm like, oh wow, I see all these people going long. I'm going to go short on them because I know odds are, if price action supports it, they're going to go short. So as you can see, prices choppy, man. I don't like Bitcoin. It moves too fast. And even during the sessions, me personally, the London session, Asia session, and New York session doesn't really work the same for the cryptos. I think that the way it is shuffled, right? Because I know with the financial sector, the way they start, I'm not sure where they start first. Either they start in commodities, then they go to bonds, then they go to Forex, then they go to currencies, and then I think last they go to cryptos. I think they start trading cryptos after 12 p.m. Because if you look at all the highlighted sessions, it doesn't move as much. But if you look at all the sessions that are where it's not highlighted, it's most likely giving really strong movement. And I think that's when the commercials are coming in. So cryptos have a different session when the commercials are coming in and sponsoring the buys and sells. Your classic ICT kill zones are not going to really cut it for cryptos, in my opinion. I think you should just look for the obvious areas where there's speed and try and formulate a session in between here. So based off of this, like sometimes it's choppy. I don't like me personally. Bitcoin, I think, is like a ludicrous to trade, man. And it looks like to me too. Like buy side, I had this marked out a while ago. I'm not even sure what this is. Examples, maybe the monthly. Oh, I think I just put a line there. But yeah, we took out the previous monthly high, and it looks like we could probably be looking to come lower, back down into this bullish order block right here. So this is probably a counter trend candle. It's a large candle, but it could be a counter trend candle because overall it is what? Bearish. And why am I saying overall is it bearish? Because on the monthly, we got that market structure shift for Bitcoin. So it's here. Oops. Right there. And then we have the fair value gap. Now, could price come back up and to hit it and then go lower? Yeah, potentially. That's normally what that does. After the shift, it leaves the gap. The algorithm refills it, and then we get the lower prices. You can see how the engineering sell-side liquidity. So anything below here is equal lows. There's money below these lows. They run it back up. They engineer it, Boom, they run a low real quick. Then they run it back up. Then they run the high. So it could look like this. Down, comes back up, and then they jump Bitcoin back down to zero. I'm not sure if Bitcoin will ever come back to zero, but I've been calling Bitcoin to zero from a while. I think it was around the shift of the market structure shift. I wanted Bitcoin to come back down to zero. I have a lot of posts, man. A lot of gems in here. The central bank dealers range. A lot of people like to see that. Where is the Bitcoin one? If I can find it for you guys real quick. Even like this, like these are old IPTAs. These are old ones you could play forward just to see how they work. This is December. Same thing. Because someone was confused. They were like asking me, why are you picking December over January? I'm like, I'm only using the current month unless other things are necessary. 20-day high, 60-day high, 40-day high, 60-day low, 40-day low, 20-day low, and then I'm casting forward. I'm not sure. Did I write a script here? Yeah, I just obvious areas of liquidity and open float. Look, then leap. Save trading this month traders. And I was trying to speculate what would happen here. December, not a good month to trade for currencies personally, but if you want to. And you can see, if I could get off this tool, I have this drawing tool. It's AU. This is 2022, last year, December. Play it forward. You can see, look, it takes out the 20-day high. Doesn't give much. The whole month, basically, pretty much. Because if you cast forward December 1st to December 30th, 20 days forward or whatever, it's just sideways price action. See, like, certain months you're going to be met with this. Which is why you got to pick certain months to trade. You can't trade every single month. Some pairs are going to move faster than other certain months. You can see December, just Aussie was just sideways. Even towards the end of November, it was just moving sideways, choppy. This is a market that you don't want to trade in really bad. You would, if you were to trade in here, you're looking for low profit targets, like very low profit targets. You're not looking for anything extreme, because look at all these daily candles. Look how small they are towards the end of the year. Look how tiny that is. Probably each candle is probably, I would assume, probably under 200 pips each. Prior to the, like, if you look at the prior months, all these candles look larger than 200 pips. So you have more of an opportunity to grab something out of that with the range expansion. But this is choppy price action. And then if you see it forward, that's where we are now. But look at how these old, this is old IPTA data ranges. I wish I could zoom out better. These are old liquidity lows that haven't been taken out. What are the odds that price comes back and takes out these lows? Probably significant because of the current IPTA data range that occurred. Took out the 20-day, February took out the 20-day high here, and now it's running lower. These lows are still intact. So there's a chance that price could come back down here to take out all the open float here. This is huge open float. This is months prior. Price could come back down to here and take that out. Let's look at another one real quick. GU, December, cast that forward. Takes out the 20-day high, reacts, comes down. Does it again, comes down. Sideways. This choppy month. December, like I said, every month is not worth trading. December and January are the 2 months I don't trade. December, I'm mostly looking to trade U.S. oil, personally. Switching trade to U.S. oil. I'm not trading currencies in December because I'm going to be in this environment. It's not healthy. I don't want this. I want this. Something like that. This leg up. Let's look at... Do I have a DXY one? Yes, I have a DXY one. Perfect. So we can look at this. DXY. Same thing for December. Choppy. December and January. Look at December and January. Choppy. But what does this look like? Look at the same thing. It's inverse to Aussie. AUD. Look at all the buy side open float liquidity above here. You don't think DXY could potentially, during this year, finally get back up to these highs? Yes. It's buy side liquidity. It's definitely significant levels. It may not be your current IPTA data range, but it is still an open float data range high. 20-day high is still intact, the 40-day high is still intact, and the 60-day high is still intact. Took out the 20-day low. It took out February's IPTA January lows, 20-day look back low, and now it's going up. And before I said, what does this look like? Accumulation, manipulation, distribution. We're going to look for another leg up probably. And I'm not sure if I posted that anywhere recently. I don't think I did. I wish I did. Some things are private because I personally just need it for my own studies. Oh, there it is. DXY. Right here. This is what I was looking at. Look at the month of December. Look at the month of January. Accumulation right before the start of the year. Price opens here. This is the yearly open. So the same concept was Sunday's opening price. Midnight opening price is the same thing. Anything above the yearly open is premium. Anything below is a discount. So commercials are most likely trying to get large net long positions underneath the yearly opening price. February distribution? Possibly. And look, as we can see, it's slowly coming back up. I'm eyeing this. And if you want to think at it as A or power 3, accumulation, manipulation, distribution, this is the Asian session. This is the London session, and this is London / either going into New York session, because sometimes the London session makes a manipulation and it starts running higher already, but sometimes it starts at 5 a.m. You can see here New York session probably, and then it starts to distribute higher. Every down close candle met with speed to the upside. So let's say DXY tomorrow, let's say Monday is a down close candle. That means Tuesday I'm probably looking to go on the attack and hunt for a long setup. Let's say on EU, go EU. This is the last one. EU, monthly, oh my gosh. We got a quarterly shift. You can tell something's going on here. You could tell. Took out the previous monthly high. Ran back into what? Fair value, a small fair value gap here. May not be high probability, but what does it do? It runs into a fair value gap here. Get this over here. It's tiny. Runs right through that. But what do we also have here? Price comes down, comes up, comes down, comes back up. right into that range. Look at that dynamic sell-off. Probably trying to get back down to what? August's lows. And this is the monthly chart. It'll take some months to get down there. It might happen pretty quick though, because look how large some candles are larger than others. So the range expansion may be larger. But we know, just based off of looking at the monthly chart, we already know that they trapped anybody that thought EU was going to go higher. Because look at how it runs up, makes the high, comes back to the open, and now it's a dark candle. It's coming down. Boom. And now it's looking, and then it's probably going to close off. March may be a counter trend candle. It may be up. And then get retail guessing, oh my gosh, it might be going back up. And then March actually might be the counter trend candle. And then you sell after that, and it dumps. Look at this down leg. Everything is a fractal. Look at this down leg here. Look at any of the up close candles on this down leg. It's a monthly chart. Look at the power of this. Imagine you use the power of the monthly chart and you saw a month like this and you knew that this price was probably going to keep going to this swing low here. All you had to do was wait for an up close month, sell on weakness and sell on strength. And what would that look like? Because I feel like I might lose people when I say that. When I say sell on weakness and sell on strength, selling on strength is when the market is going up. So you're going to use a stop order. So you're selling here on a sell stop. Hopefully I don't got that backward. I think it's a sell stop, yeah. Sell stop. Boom. So price comes in at a stop. You're getting in on strength. When price runs up into this next month, you're in short. That's one way. The other way you can do it, I think that's the safest way. Me personally, if you're going short, you want to sell at either the high or the close. But if you want it to be, a little more nifty, let's say you missed that setup, and you know that it's still going lower. You can place a sell. This is the same thing like with the Asian session. You place a sell limit. No, this is a sell. I think it's a sell. No, sell limit. Yeah, sell limit. Unless I got it backwards. I always say concepts backwards. Sell limit here. You're going in on weakness now. So you triggered in on strength and you triggered in on weakness. What happens the next candle? Boom, you're in short and you hold. And it's a monthly chart, so you're going to have a hefty stop loss. And you're looking for price to run away from that price. You want it to run away from this up close candle. And look how fast it runs away. This is a lot of weeks though. Some people are not patient for that. But you can definitely build in every year. You can set up one trade idea that's a swing trade that you can hold throughout the year for a couple months. You'll make some substantial amounts of profit. You don't have to intraday trade every single day if you don't want to. But you could definitely, for the year, 3 times out of the month, look for a swing trade. Every month that is at least feasible, that you find that it's going to trend, look for a swing trade and hold for 2 months. Hold for a month at least, a whole month. Hold from the beginning of the month to the end of the month. Hold for 30 days and see where that gets you. I guarantee you're going to build a lot more equity and wealth over these short-term traders. These short-term traders are in and out of the market. They have probably a low tendency to hit hard. Their accuracy might be less accurate than you are because you're swing trading, and you can block out all the noise. You don't care about the news. You don't care about Fed Chairman Powell speaking about the Fed's interest rates. You don't care about that because you're trading the monthly, weekly, and the daily time frame. And if the news does coincide with your trend and your idea of bias, then it's just a rocket ship. It's just a dynamic move in your intended direction. And you can see price comes all the way down. You get an up close and then price runs down. And eventually the trend is going to change because we know there's quarterly shifts. Every 3 or 4 months, even 6, sometimes even 9, every couple months, there's going to be a shift in trend. You can see here, look at this up move here. 1, 2, 3, 4. 4 months. Okay, we can't be bullish the entire year. That's 4 months. You got 6 more months left. You think all 12 candles of the monthly chart is going to be bullish? No. One of these candles are going to be down. We could say at least one. But I could say maybe at least 2 or 3 are going to be down for the year. You can see here, look, September, November, 2 are down. And then the rest are up. The whole year is not going to just move up, 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 up. There's going to be a counter trend candle. There's going to be a quarterly shift. And that quarterly shift, because these are not quarterly shifts, these are just counter trend candles, because we can see from hindsight, it doesn't start the trend to go lower. But we can see here, look how price comes up, up. Here comes the quarterly shift. 2 months up, quarterly shift, it starts the leg all the way down. And normally, using IPTA, that's how I'm able to find the bigger trades. Like I said, when you go back to that U.S. oil trade, way back, that was how I was able to find that December, it won't go that far, I think, that December bullish run in 2021, I believe it was. U.S. oil just kept going higher, didn't want to stop, because it took out a 20-day low, and it was the quarterly shift month. It was the month that said, yes, price action is going to be bullish for the next couple months. I just want to show that example. It's the last one, I promise. I promise. I just hope that everything that I'm saying makes sense. I just want to be very clear and concise and thorough. I want you guys to get as much as you can out of me, you know? We are all resources. We need each other to strive, to build on each other. You can't be stingy with information, you know? If I can find it. Sheesh. This is far, man. There's a lot of IPTA examples. I've done this for a couple of years, man. Done this for each month. I've done this, so I have a library of what I normally am going to anticipate or look for in the market. January 2022 IPTA. Look at that. That's gold, man. It's last year. Same thing. I just drew it a little different, you know. This is last year though. Look at that. Price trades up here, takes out the 20-day high, quick reaction down. But then we can see shortly after that, it's short-lived. It sweeps the swing low, doesn't take out the 20-day low or the 40-day low or the 60-day low. But look at where price is now. Isn't that strange, right? It's strange. It's coming right back down to lows that it hasn't touched in a long time. That's open float. That is open float. Those sell-side liquidity that's been in the market for such a long period of time. And what is this, 2022? You keep playing, it does rally up again. Oh, it rallies down. Oh, it actually kills it. Look at that. Comes right back down to these lows. So eventually, and it might be a trade set up off of that. If I was able to draw this out in price, could go short here. Price comes back up again, comes back, but it ultimately cleans out the open float that was left in January. You can see that. So there was some type of shift here that told you, okay, lower prices. But let's say one IPTA data, all the IPTA data ranges would have told you because it broke all the lows. But you can see it comes back to this one. But in this January one, this example here, it runs back up to the 40-day high. And yes, sometimes the 40-day high is higher than the 60-day high. That happens. It's just the price action happened to set it that way. But I'm still marking it out as if it was the high for this. And you can see how price comes up, threads the needle between the 60-day high, 20-day high, comes back down, then runs back up. And where is this happening? Almost 20 days forward when the turning point happens. So sometimes when you cast forward 20 days, that exact day, literally that exact day, sometimes is the turning point. Let me see if I can measure that out. 20 bars. Look at that. 20 bars right here. January 28th from January 3rd. 20 bars forward. That specific date was the turning point. It hits that day and it just runs up. Bullish super cycle. Runs all the way up to the 40-day high quickly. 20 days forward. Like I said, every 20 days the market is going to either chase a new liquidity pool or it's going to move in consolidation every 20 days. Roughly every 20 days. I won't say it's perfectly every 20 days. But, yeah, man. Did a lot of talking. Hopefully that was very insightful. I appreciate you guys coming out and supporting. Hopefully you gathered something from me today from this lesson. And I'll see you guys next Friday. Peace.